Hey, everybody, welcome back to Practical Liberty. It's been about 6 months since I did an episode on crypto, and the markets have changed slightly since then. I think it was at 30K the last time I did one back in May, and now it's hovering around 16K this morning. So I thought today was a great day to have a conversation with the author of Crypto for Conservatives, Nick Watts. Nick, thanks for coming on, man.
My pleasure. Good to be here.
So before we get into the crypto, I want to talk about your history a little bit because you kind of had an interesting conversion into libertarian type thinking. So your other book is actually I think it's called, what is it? Taxation is Slavery: The Biblical Case for Libertarian Politics. So can you kind of talk about
Yeah.
your origin story there and how you got into this type of thinking?
Yeah, sure. It's kind of an accident almost. I went to theological college, it's like Christian Bible college, and when I went in, I was kind of a pretty stock standard, I guess, like right leaning, the equivalent of like a right leaning Republican type sort of. I think basically like Stephen Crowder, Ben Shapiro, those kind of guys, roughly their kind of politics. But I was just not that interested in politics. That was kind of by default. And towards the end of my time in theological college, I had to do a project for my master's, and I decided to write it on what the appropriate biblical ethical level of taxes should be. Because I had this theory that if I could work that out, since it was so nuanced, right, you could tune that to this, it should be like 9.785%. You could tune it down so finely. If you could get a good framework for that, you could probably apply it to just about any political question. So if you're going to be like a Christian in politics, that would help you work out a lot of things. So I decided to write this project, and it took me in a bunch of directions I did not expect. And by the time I kind of did all the academic reading and really got stuck into the Bible and the church fathers and all this other academic stuff, I went right down this rabbit hole and ended up like a full blown ANCAP. And then I had to work out a way to make my original master's project, which is about figuring out a correct tax rate. I had to find a way to reframe that so that I could say the answer was zero. Uh, anyway, I had all this research that didn't fit into the project, so I took that all and made it into a book, and that's Taxation is Slavery.
So, I mean, I think when most, I grew up going to church, and there was always I think it was Romans passage about, render unto
Mm.
Caesar. So what is the case that you shouldn't, we're living in the society. It's, this is politics is kind of outside of the Christian worldview is how most, I think, American Christians, at least that I've known, kind of see it. So you pay your
Yeah,
taxes because that's, the Bible says that's just, I guess, kind of don't worry about that side of the world. So what is the biblical case for no taxation?
I guess if I wanted to sum it up in a nutshell, there's a reason I titled the book Taxation is Slavery. I think that is how the biblical authors see it. From Genesis through Revelation, and then as you start reading commentary from the early church fathers, they really see the two as one and the same. Everywhere they talk about taxes, they talk about slavery. They use the language of slavery and freedom. So they actually say, this nation got conquered by that nation. They became this nation's slaves, and then they paid them tribute. That's just how the Bible talks about it all the way through. That's how Irenaeus and Tertullian and Augustine talk about it. Irenaeus even talks about, like, he commentates on Romans 13, that classic passage about, this is why you pay taxes, because the authorities are servants of God attending to this thing, and they don't bear the sword in vain. All that, for those familiar with that passage. Irenaeus, the early church father from the late 100s AD, he commentates on that and even sort of says, obviously, a king, you couldn't have a Christian king who rises up and conquers their neighbors. They'd have to be an apostate to do that. Like, he just assumes from the outset this kind of behavior is not a Christian thing to do. Uh, so I think really, once I took in the broad sweep, once I went looking to see what's everything the Bible says about taxes, not this, there's basically two passages people normally go to. One is Romans 13, the other is Matthew 22, where Jesus says, render unto Caesar what is Caesar's. Once I kind of put those two little proof texts in the context of the whole Bible, you really see that they're saying those things, Jesus and Paul, into a context where everyone just assumes to be taxed is to be a slave.
That's
So
interesting.
that's
Yeah, I mean, it sounds right to me. And honestly, when every time I cut a check, it feels like slavery in some ways. I got to write quarterly checks to the government for all the ways they're ruining the economy right now and bombing everybody all over the world. It doesn't feel like the good Christian thing to do, but I'd also rather not be in jail.
There's times when it really gets me down.
So speaking of some of the bad things governments are doing, before we get into crypto, let's talk about inflation, because people, it's one of the hot topics right now in America, and I'm assuming around the world, it's kind of happening everywhere. But I kind of see things, the reason for crypto that everybody always talked about in the early days was, it's a hedge against inflation. But we've seen massive inflation over the past 2 years, and crypto's crashed. And there's an interesting, over the past, 30 years, there's been, I guess it's biflation, right? There's been some deflation based on kind of technological advances where it brings prices down. So people don't notice that the value of their dollar is becoming lower and lower. So inflation is still, in my mind, a major reason to think about crypto. But how do you view inflation in the world right now?
It's a great question. Just for obvious context, if it wasn't obvious from the accent, I'm in Australia. And we do have reasonably high inflation here as well. It's not that different to the US, with the exception that our central bank is raising rates in smaller increments and slower. And our rates are still significantly lower than yours. So we're going slower to catch up. It's hilarious. So we have that same problem. The first big distinction I'd always want to make is, what is inflation? I think people, economists even, will use the word inflation to refer to both the cause and the effect, which I think is really confusing. So the cause would be printing a bunch of money, and the effect would be a lot of prices go up. But prices don't go up uniformly, and there's other cross currents like advances in technology that will tend to bring prices down. And so I think it's most helpful. I try to use the word inflation primarily to mean the cause, the printing of money, because then changes in prices of various goods and services, they are a lot more chaotic. They do not rise evenly. You could foresee a scenario where the printing of money actually distorts the economy in such a way that particular specific prices of some things go down because you end up going into a recession or a depression, and demand for those things just falls off a cliff or something like that. So I think in that sense, I'd want to say that crypto is a way to resist the cause of inflation, but not necessarily to always prevent yourself suffering the effects, if that makes sense. So I don't expect, I think crypto is a good way to, in the long term, help insulate society from the problem of the government printing money and devaluing the currency. But in the short term, the price of cryptocurrencies measured in fiat currencies is going to do all kinds of things, just like the price of everything else.
So what is going on with the crypto market right now? Like yesterday was a very bad day for crypto, obviously. Recording this on Thursday, and because it's so timely, this is going out tomorrow on Friday. But I don't know. So what is going on with crypto? Like, where do you see this market right now?
This last few days, there's been particular drama with a big exchange called FTX that's pooped the bed, and basically looks like it's on insolvency and possibly going bankrupt and all this kind of thing, and it's just taking the whole market down with it. The reality is that crypto is a very speculative market for the time being, and so just about everything seems to trade together. Things that are quite legitimate from things that are totally illegitimate, they still go up and down together almost as one. I only hold a very narrow set of a few cryptocurrencies, and they've all taken solid dips with the fall of FTX, even though I'm not even sure if one of them is even listed on FTX, but it doesn't matter. The market as a whole tends to move together. And so the fall of this one big exchange is kind of carrying the whole thing down. That's in this last week.
Yeah. When it comes to like prices, I always think of the market is rational, but over a longer time period. On any given day, the market could be completely insane.
Absolutely.
you can't look at things over a 1 week or a 1 month type time frame. You have to look at them over like, I don't know, a 5 year time frame almost. But I mean, having said that, over 5 years, crypto's still only up like, well, I measure things off Bitcoin, and we'll talk about Bitcoin because you actually have an interesting view on that. But I think Bitcoin's only up like 150% right now if you look at a 5 year time horizon.
So
where does this go? Like, how is that? Crypto used to be up what 5,000% over that 5,000 or 5 year timeline. So I don't know.
Yeah,
I don't know if there's a question in there, but it's
is it guaranteed to bounce back? Yeah, nothing's guaranteed, right? I like George Gammon in the sort of finance social media world. There's one thing he commonly says: there are no certainties, only probabilities.
right.
I think that's wise advice for anything in the finance world and anything to do with trading and investing. So no certainties, but I think the likelihood is that yes, the solid cryptos will come back substantially, but going to stay down for a while. They're very prone to the panics and manias. It just is a speculative market. There's a lot more people speculating than there are actually using it for the time being, and so sentiment makes a huge difference to price.
Well, and a lot of that big pump came from the government's writing checks to everybody and people sitting at home not having anything to do and watching this asset go up. So it was always going to correct if you look at it. I got caught up in the mania a little bit. I bought a bunch near the top,
and it's surprisingly easy to get into trading it, right? I owned crypto on like a regulated exchange. I bought crypto through there before I'd ever owned a stock, before I'd ever owned real estate. It's easier to get into, and so there's a lot of frankly naive, dumb money in the space.
So how do you view crypto as competing currencies? Because I was looking through your book a little bit, and one of the things you talked about was competing currencies. And there's a bunch of examples of places in the world that take their own currency and the U.S. dollar. Like I was in Costa Rica a few years ago. You could pay in dollars in a lot of places, and it's like that throughout the world. So it makes sense to have competing currencies in a free market system. There would be competing currencies. Actually, if you go back far enough in the U.S. history, we had like wildcat banks that had their own competing currencies that actually worked in a lot of cases. But I guess, can you make the case for why crypto instead of some, even if it's like Peter Schiff envisions this gold-backed crypto being the new standard, but why is crypto on its own going to be a viable option for a competing currency?
So I think crypto has a lot of key advantages. The obvious one being it has a monetary policy, or it should have a monetary policy that is kind of fixed and everyone agrees on. It's kind of set in stone. That's not true of every cryptocurrency, and that's one of the things I point out in the book. If you're going to buy one, this is one of the absolute must-have elements. It should have a fixed monetary policy. So that's one key advantage. It protects you from someone being able to arbitrarily print more, and by doing that, siphon off purchasing power to themselves. That's kind of the key advantage against fiat. The key advantage against commodity money like gold and silver is convenience. It's much, much easier to do transactions with cryptocurrency than it is to do with gold and silver coins. Just to drive that point home, like I obviously have some crypto. I have some gold and silver coins, and I've offered for people to be able to pay me for copies of my book in silver coins or in a couple of different cryptocurrencies, and they've consistently opted for crypto. I've got a couple of significantly libertarian, even ANCAP friends around here, and I have bought things from them. One of them has baked me bread, which I've bought with Monero, and but that was the thing. It was obvious to us. We didn't really, he likes silver. He has some silver coins too, and we just opted for crypto because it was more convenient to just pull out a phone, swipe and scan, and transfer, and there it is.
The divisibility thing is a big factor for me. I do have some gold coins. I have a bunch of silver coins, but like, if I'm buying a loaf of bread that's going to cost what, $4, like, do I take one of these silver ounces and like shave off pieces to give it to you? Or like, I mean, it doesn't.
What happens if silver actually goes to $100 an ounce, or whatever the silver bulls think it might do?
I don't know. I mean,
suddenly silver is even harder to divide.
Right. But that's why I think Peter Schiff's idea of making cryptos backed by, I'm sure there would be one crypto backed by silver and one backed by gold, and then you can divide it infinitely. It's the same concept of what fiat currency originally was supposed to be, backed by like a hard metal. But this is the easier way to transport and divide it.
Yeah, so gold and silver backed cryptos exist already. I have actually owned some in the past. That was pretty early on when I was looking at crypto stuff. This must have been 4 or 5 years ago now. So there's a particular like vaulting service, I think, here in Australia that issues a crypto token that represents apparently gold and silver ounces in their vault, which I thought was a great idea. But as I sort of thought it through over time, the more I realized that I have no way of knowing whether they actually have those ounces. Right. There's nothing really stopping them from doing fractional reserves, which for people who know what that means, who've looked at monetary history, just know that's a way of doing inflation. Right? I have 10 ounces of silver in the vault, but I issue 100 claims on those ounces and hope that only 10% of the people want to redeem them at any one time.
Right. And that works most of the time. Like it works. Yeah. You can usually lend out 5-10 times the money you have. The problem is it works until it doesn't work. And then you have a major problem.
Exactly. And so my something I mentioned in the book is that the problem I see with having a crypto token to represent those things is that crypto is inherently inefficient. It's deliberately a very inefficient way to run a database. And the advantage of that inefficiency is that you get that decentralization and you remove any trust in any one entity. But if you're going to back your crypto with physical metal, you're inevitably going to have to trust the custodian. And putting a crypto token in front of it doesn't do anything to alleviate that. So if you're not removing trust, there's no benefit to the crypto token. You just get the inefficiency cost, but without the benefit. So I would expect that if that actually really played out, if we move to like a gold standard with crypto tokens, there would be people offering tokens who are running them on a centralized database rather than a decentralized crypto token. And their costs would be much lower to facilitate that vaulting and to process transactions. You would have to pay a transaction fee, most likely, to transact with a crypto token that's backed by gold, where you might be able to have no transaction fee if it was done using a centralized database. And since you have to trust the custodian either way, I think most people will opt for the no fee option. And I think the gold-backed token will just get outcompeted.
So fees are an interesting conversation in crypto, right? Like if you look at the fees on Ethereum and even Bitcoin transactions, it's not efficient enough to actually buy anything under, I don't know, some certain level of price. But is there a way to solve the fee issue in crypto, whether it's backed by anything or not?
There are a few different ways to come at the fee issue in crypto, and it just depends on exactly what you want to optimize for. So different crypto projects have come at this different ways. I'm trying to think where to start with that discussion. I'll mention a couple of interesting ones here. So here's 3 big common broad categories. So one is we'll have high fees on a low number of transactions, but those low number of transactions will represent a lot more than one transaction of economic activity. So that's Bitcoin, BTC today. There's high transactions to exchange on the Bitcoin network, but then the idea is to have a whole bunch of economic activity compressed into one Bitcoin transaction. And so there's only that one fee spread across all the people whose economic activity is embedded in that one transaction. So that would be like the case if you can imagine having like a bunch of people just do their transactions back and forth on a spreadsheet. And once a day, they commit one transaction representing the net of those transactions into Bitcoin. And the fee is spread across all their other activity.
Right. In the book, you describe that
Yeah.
as kind of a poker game, right? Where everybody puts their money in a lockbox, and then at the end of the day, it's all divvied up however it come out. Yeah.
You transact with poker chips during the game because that's faster and easier. And only once do you actually take the cash out and divvy it up. So that's Bitcoin. There are other coins that try to do on-chain scaling. So that would be Bitcoin Cash, Dash, Monero, those kind of things. And their expectation is to have lots and lots of transactions happening directly on the network. And because there's so many of them, the fee for each one can be small and still have enough fee revenue coming in. Then there's other ones that go a whole other direction. So coins like Nano, Nano sets out to actually be feeless, zero fee for the transaction. A key purpose of the fee is to prevent spam, to prevent people just flooding the network with transactions. It needs to cost something. So Nano gets around that by having a cost that is not a fee. You actually have to generate what's called a proof of work. You have to expend some electricity, just a small amount, in order for your transaction to be valid. And that creates a cost for the sender, but it's not a fee that's paid to anyone.
That's
But
interesting.
it means that they can actually have, a zero fee. It feels free because the electricity is quite small and it's kind of hidden from the user. It feels like a zero cost, and that to me is a really powerful marketing tool.
So is that how you get to like the micro transactions that was the dream of the crypto in the early days?
Yeah, definitely. So very much in the Nano community, that community is all about, we can do microtransactions better than anyone because we have this zero fee thing. A transaction can be any size, no matter how small. I don't know if it's necessarily helpful to have ultra small microtransactions. I think it's probably better to do those on a ledger outside of the crypto network. For various technical reasons, I think there's some threshold below which it's not worth bothering to put it in a crypto ledger. But the point is they have that flexibility.
Interesting. So let's talk about Bitcoin, because I think I was actually very surprised when I got towards, it's like, I don't know, almost towards the end of your book. You're like, yeah, I don't know Bitcoin, but you're the crypto guy. And, when I talked to Nick Black 6 months ago about crypto, and he, his argument on Bitcoin is it is the blockchain, right? It's the proof that this thing worked. It's the original thing. It's never going away. It has the most trust. It has the most brand recognition. So what are your arguments against owning Bitcoin?
Yeah. Okay. So I guess it boils down to a couple of things. One is just sheer usability. So I think the people like Nick Black who would say, look, this is the big main dog, they're absolutely right. It is the one with the biggest market cap. It's the one that everyone has heard of and recognizes. And there's something to that. And I considered buying it for just that reason. But when it comes right down to it, I set myself a set of principles for what I'm looking for in a cryptocurrency worth owning. And one of them is it should be fast, cheap, and easy to use. Because if it's not, normal people are not going to adopt it. They just aren't. People like iPhones. They don't like, Unix servers. They don't want to sit and write a bunch of code to the command line. They want big shiny icons. Do this, do this, do this, done. So any crypto that I think is going to get mass adoption has to be cheap, easy, and almost like borderline fun to use. It has to be like you can tap your credit card at a merchant. You can tap and go, pay wave. It has to be that level of easy, or people just aren't going to bother. And with Bitcoin, I just don't see it getting there. Bitcoin on chain fees are high. Fees are measured in dollars, not cents. At times in the past, they've been measured in tens of dollars. That's just ridiculous. That's never going to take off for mass adoption. Lightning Network is, gets around the fee issue to a degree. Even then, some of the fees aren't quite as low as I'd like them to be.
Can you just tell people what the Lightning Network is and how it works to kind of facilitate transactions?
So the Lightning Network is kind of a second network overlay on top of the main Bitcoin network. So they're sort of separate but connected. So the idea is that the Lightning Network allows a bunch of people to open what are called channels to each other. And we mentioned before about that lockbox in a poker game. So imagine you and a bunch of friends sit down to play poker. You all brought cash. You put all the cash in a lockbox. You get an equivalent amount of chips back. And throughout the game, you're just transacting with poker chips, not with the real cash. And at the end of the game, you kind of true up and everyone turns in their chips and gets the equivalent amount of cash back out. Lightning's kind of like that. You have some Bitcoin on the real Bitcoin network. You lock it up in a lockbox called a channel. And then the person you've opened that channel with, the two of you can kind of shift back and forth. So if I've put 10 coins in, you've put 5 coins in, there's a total of 15 in our channel. And that can travel back and forth between us. But it can never, neither of us can end up with 16 coins. We might end up with 3 and 12 or 2 and 13 or whatever, some split that eventually gets committed and we get those coins. Then you can imagine multiple channels. So I've got a channel to you, there's 10 coins in that channel. You've got a channel to our friend Bob. There's 10 coins in that channel. I can push 3 over to your side. Then you push 3 from you to Bob. And that's how I would send to Bob through that kind of multiple hops. So it is, if that sounds complex, it's because it is kind of complex. And it takes some effort to manage all that and keep those channels maintained. There's computational difficulties in finding routes between all the users that have enough coins available in each intermediate channel to make the transaction actually go through. This is why you'll see people do Lightning transactions and then like the transaction just fails and they've just got to retry. It's an ongoing problem. Now, to be fair to the Lightning people, there's a lot of bright people working hard to try and resolve those problems, but I'm not confident that some of them are actually solvable. They're just the way the whole thing is structured. Some of those problems are always going to be there. Mitigated a bit, hopefully, but I don't think they can be fully removed, and that just makes the user experience rough. I think it's going to be really hard to compete with the much better user experience of some other cryptocurrencies.
I guess my argument for Bitcoin, because that's, I mean, I think you've made a pretty compelling case that it won't be adopted wide scale as a currency, but I think as a store of value, I think it's going to stay there. So it's kind of like, it's like we talked about.
I don't think it's going to die.
I own gold and silver for the same reason. I never plan on transacting with it, right? If I ever want to, actually buy something that from all the value that I have stored in gold and silver, I'm going to trade it in for something else. I kind of see Bitcoin being the same way, where I think it does get to that, $1 million per coin type valuation over the next 10 years. But nobody's trading back and forth in Satoshis, fractions of a Bitcoin. I think it's more just that store of value. Like, this is where I'm holding a chunk of wealth, right? It's like the same thing I value in my house, where, but I'm not buying things by selling people 0.001 acre of my property, right?
Yeah. So I think there's something to that. It's I think a lot of people see it that way, and just the sheer fact that a lot of people see it that way might be enough for it to work. But the issue I see with that is that the value of a cryptocurrency is the capacity to facilitate transactions. That is what gives it value. So when people talk about like the intrinsic value of gold and silver, and people like Peter Schiff will say, crypto has no intrinsic value like gold does. We're Austrians, right? Intrinsic value doesn't exist. Value is subjective. So the value of gold is that someone wants it to use for an industrial application or for jewelry or for a gold tooth or whatever. Someone values it for those purposes. Why does someone value owning a cryptocurrency? And specifically, why do they value owning Bitcoin? Let's set Bitcoin aside and just take any given cryptocurrency. The reason to value it basically is that owning the token allows you to transact in that network. It allows you to facilitate commerce. So if you want to buy and sell something on the internet, you might pay fees to PayPal or Stripe or MasterCard or Visa to facilitate your transactions. And so, like, obviously you're gaining value out of that relationship with something like PayPal, or you wouldn't be paying them a transaction fee. You wouldn't be willing to do that unless they were providing some value to you. And for the same reason, if a cryptocurrency network can replace the function that PayPal gives you, it has value for you. And that value is facilitating the ability to transact. If Bitcoin is bad at facilitating the ability to transact, then what is its value? Why do people want to hold the token? And the only reason seems to be because other people want to hold it.
Right, which is the argument behind pretty much every currency. It's the argument behind the US dollar, right? The reason that people own it is because, well, first of all, we have the biggest army. And second of all, because people, trust that we're going to keep the biggest army, I think, in general.
And so the MMT people, for all their faults, may have a point there that the government demanding taxes in USD puts a floor under the value of the USD.
Yeah.
Where Bitcoin doesn't have that, although I suppose in El Salvador, maybe it does at this point.
Yeah, but they don't demand taxes in Bitcoin, right? You're allowed to pay it in Bitcoin, but it isn't.
Yeah, they would accept them in something else. Right. You wouldn't have to. Yeah. Just thinking that one through out loud. So yeah, I think there's this possibility that if the market cap of some other cryptocurrency flipped Bitcoin, if it was no longer the number one for market cap, if it started to have some serious competitors in terms of brand recognition, public mindshare, it could have a real problem on its hands if like people might start looking around going, why do I hold these tokens? I don't transact with them.
Right.
Why don't I just hold my cash balance in something I do transact with?
So what, I mean, Ethereum was supposed to solve a lot of the Bitcoin problems of being able to transact. And it is a little easier to use in some transactions, right? It's proof of stake, not proof of work.
Yeah, relatively recently, it sort of historically was proof of work. It only made the transition to proof of stake. I'm not a big Ethereum guy either. I don't spend a lot of time looking at Ethereum for reasons we can go into if you want. But I don't see it as competing all that directly with Bitcoin. It's trying to solve for quite a different use case, I think.
So what, I guess, what are the problems with Ethereum? Because of the, if you had to walk up to a man on the street and ask what cryptos they know, they're going to say Bitcoin and they might say Ethereum. And then it's going to be whether or not you found a dork or not, if they know any others.
So I don't know. I don't know if I want to say this is strictly a problem with Ethereum. It's more that I would say Ethereum's not trying to be money. It's not trying to be digital cash. It's trying to be a platform for decentralized, trustless computing. It's trying to be a platform for you and I to be able to run a computer program, both of us run it, and be able to agree with no trust on the outcome of running that program. That's what it's solving for. It's not trying to be money the way that Bitcoin is trying to be money. And so I don't even really see them as direct competitors.
Yeah, they don't. They mean they seem to move in parallel to each other over the past couple of years, anyway.
Yeah, obviously, from like a speculator's standpoint and trying to make a profit off them, there's some technology they have in common, and so they're kind of grouped together from an investment speculation kind of perspective. But in terms of the product, in terms of what an end user wants them for doing, I think they're for quite different use cases. So that's hence I don't spend a lot of time on Ethereum. I don't think it's even trying to solve the digital cash problem that I want to see solved.
Yeah, I do own some Ethereum, but I'm not too hot on it. I'm not selling it because it's a sunk cost at this point. And
yeah, I'm not even saying I think it'll go down or anything like that. I don't really have an opinion on the future price action of Ethereum. It's the same way I don't really have a great deal of opinion on what the price action is going to be in, I don't know, fertilizer stocks. It's not a thing I spend a lot of time thinking about.
Fair enough. So let's say there is, you listed a couple of cryptos that you like that have the potential to become good, actual transaction currencies. But one of the things that's coming, I think, whether we like it or not, and I know you and I both don't like it, are CBDCs, central bank digital currencies. So, it's just a recipe for insane inflation and insane control over society. So let's say that, one of these CBDCs comes out and it's going to somewhere in the world, but let's say it happens from the United States Treasury. What's the reaction going to be to any currency that's going to compete with that starts coming up? Like, how does the government, they want the control of the CBDC, and then if there's alternatives to it, they're not going to be happy with that, right? That becomes an existential threat to the government. So how do you see the political kind of reactions of CBDC versus actual digital currencies?
That is a really good question, and the answer is I am not sure how I think that's going to play out exactly. It's really hard to guess what the reactions of government will be in that scenario, largely because the more I think it through, the more I think a CBDC is it's such a terrible idea. It's such an obviously terrible idea.
Right.
We want to be able to see everything you're doing and have ability to just print so easily and control what you can and can't spend on. And no one wants that. Like, they might be corralled into it. They might be bribed into it with UBI, or they might be coerced into it with threats or whatever else. It might happen, right? Governments do bad ideas that are bad for everyone. That's including themselves. Like, They do self-destructively bad ideas. It does happen. So I'm not ruling out the possibility. But given that I know they can and will do things that make no sense, it makes it really hard to predict how they're going to react to stuff. Their incentives are just not obvious. What's their incentive to have a CBDC? It's going to make, maybe it gives them more power, I guess, is their number one incentive. But it also ruins a whole lot of things. And actually undermines the public's trust in them. It's hard to see what they'll do exactly. But obviously, I think there's a real chance that they will try to ban competitors, and yeah, we can talk about what that looks like.
I mean, it's, the reason they do these destructive things is because it's a time preference issue, right? Like they're only in office for 4 years to 8 years, maybe. So their only incentive
Get
is
to the
to
next election
get
and
as
get
much
the
power
golden
as they
parachute.
can. Yeah. No politician actually cares about the party. They only care about the party if it's going to keep them in power.
Yeah.
I think one of the things that becomes important in that type of situation where you have a potential competitor to a CBDC is the functional privacy of the token and the transactions.
Absolutely.
Bitcoin is not very private. It's, a
No.
public ledger. You can have secret keys and you can kind of hide your identity, but all the cartels that are transacting in Bitcoin, the CIA knows who they are. It's not that hard if you have a little level of sophistication to find it out. So how do you get a token that actually can stay private? Because I know you talk about that in the book a little bit.
Yeah. So the privacy thing is a big thing because particularly in that CBDC world, you're going to want two things. You're going to want censorship resistance and you're going to want privacy. In CBDC land, a lot of stuff that's currently in the white market will become the black market, and you will want a black market compatible currency. And so for that reason, I think people listening to a show like Practical Liberty, I mean, hold some Monero. It is the currency of the black market. It just is. Hold some just in case. Same reason, like I have some silver coins just in case there's nuclear bombs and the internet's gone and there's no crypto. Like if I really need to be able to pay someone, even in that circumstance, that's what the silver coins are for. Monero is like that for me. If CBDC dystopia happens, I want to have some Monero. So that's just to keep it simple for people.
Can you kind of talk the basic overview of why it's a more private currency than its competitors?
From a technological perspective?
Yeah, if you can kind of dumb it down enough to make it so why is it more private than other cryptos?
So Bitcoin and really the vast majority of cryptocurrencies operate on what's called a clear ledger. So you can see there are addresses stored on the public ledger that every single node, every single user can see and has access to. So a coin goes from address A to address B. Now, address is just a long string of characters. It doesn't necessarily identify anyone, but it's so easy for your identity to end up attached to an address. As soon as you buy coins or sell coins on a regulated exchange, your identity is attached to any addresses that you used there. And it's then surprisingly easy, easier than most people think, to look at all your other activity with crypto addresses that you didn't directly use with the exchange and kind of link it all up and see the relationships and see where all your coins have come and gone. So if you're a big chain analysis firm that's monitoring a million different crypto users, you can get a pretty good overview of what coins everyone holds and where all the coins are going. That's the nature of Bitcoin and all clear ledgers. Monero has basically three big innovations that come together to mitigate that. So it hides the sender, it hides the receiver, and it hides the amount. So every transaction that gets processed, you don't know who sent it, you don't know who they sent it to, and you don't know how much it was. So it's very hard to even do heuristics. So the thing with chain analysis, even if you don't know exactly who an address belongs to, you can see, well, that person that's transferring 100 Bitcoin. It's hundreds of thousands of dollars. That's the list of people that might be is relatively short. That's not a coffee transaction. You can work things out from the amounts. So it's important to hide those too. So Monero has stealth addresses to hide the receiver, ring signatures, they're called, to hide the sender, and we call them, it's bulletproofs, which are a type of cryptographic range proof for hiding the amount. That's all. That gets into some pretty technical territory.
Yeah.
For the mathematicians and computer science people who really want to go into that stuff. But the short version is it works.
You are a software engineer, right? On top of the author, so you can do those details if you need to. But yeah, for this audience,
and so I've actually just to give full context to that, just like I have written a mixer. So people who are familiar with Bitcoin will know that something called CoinJoin exists, and that is meant to kind of obfuscate the trail, the history of your coins. That's done by mixing your coins together with other people's coins. I wrote a mixer for a different cryptocurrency, actually for Nano. That basically COVID hit. I got dropped back to 3 days a week at work and trying to fill in some income. I saw there happened to be a coding contest with a $20,000 top prize in the nano space. And I thought, oh, that's something I could do with my extra free time. I'll have a go and see if I can win the prize. And I tried building a mixer for nano, and I had learned all this cryptography stuff about mixing and privacy and how that all works in crypto. And so I became very familiar with mixing on clear ledgers because I actually built one from scratch. And with that experience, my basic opinion at this point is that it doesn't work nearly as well as you'd like it to work. If you need to be private, you want to be on Monero. That was really driven home for me when so there's a thing called Cash Fusion on Bitcoin Cash, it's just an implementation of CoinJoin. It's like Wasabi or Samurai or any of these other CoinJoin protocols. It mixes coins with other people. I ran a bunch of my Bitcoin Cash coins through Cash Fusion, mixed them with a bunch of other people, and then put a challenge up on a Monero forum on Reddit and said, here's a transaction. Can anyone, trace it for me and, tell me where it came from? And I said, I'll pay $20 worth of Monero to anyone who can tell me the origin. And I'm expecting, I think I gave maybe a couple of days of deadline or whatever. And I'm expecting a few people to try and to ultimately, I wanted to see if they could figure out that I had run them through Cash Fusion, that I had coin joined them, if that was obvious to them. And what actually happened was that in 12 hours, someone posted and said, yep, here's exactly where your coins came from, even though I'd run them through multiple layers of joins. That was a real wake-up call for me that joining, it just does not give you as much privacy as you think it does. I thought there's no way they're going to be able to trace it because I've done all these coin joins. Eventually, I thought, a bunch of people will try, they'll take guesses and whatever, and I'll give them little amounts to be a good sport. But it was just a social experiment to see if they could tell what I had done to hide my tracks. In practice, someone completely tracked me down in a few hours.
Yeah, that's depressing.
Yeah. So the Canadian trucker thing happened. I don't know if you remember. I'm sure you do remember what happened there. And after that experience, I kind of looked at that and thought, what, if I was going to donate to something, like if hypothetically I was going to donate to something that politically sensitive, it's Monero only. Now, I own some Clear Ledger coins. I'm not saying never use them. I'm not saying they have no value. There are other trade-offs involved in Monero's privacy. But if you're John McAfee and you're on the lam and you're running from the government, and you're living in the black market, it's Monero. It just is.
That's interesting that they actually seem to have solved the problem by just three-way blinding different things.
Yeah, so it's a good solution to the problem. It has other trade-offs.
So what are the trade-offs? Just the biggest one or two that you see.
Wallet experience, the user experience of actually using Monero to transact means that if you're going to use it on your smartphone has to actually look at every transaction that happens on the network to figure out which ones are coming to you, because only your phone can tell whether a transaction is for you. So it actually has to look at every single transaction that everyone in the world does on the network, because there's no way to know without inspecting them all.
It seems to be a computing problem.
Yeah, so you have to wait for your phone to scan them all each time you open the wallet. And there are, I'm an engineer, and I'm working on some of those problems and trying to work out ways we can make that better for the end user, but it is a problem to overcome. The other one is that to validate future transactions, you have to retain some data about every past transaction ever, because you don't know which coins have been spent. You can't discard old transaction data because you don't know if it's old.
Right.
That's it cuts both ways, right? On the one hand, that's very private. You don't know whose coins are whose or which coins are spent. And I could send you Monero and I could watch the blockchain and I'll never know for sure whether you ever spend it. On Bitcoin, I can know whether you moved it or not.
Right.
On Monero, I can't know that. So that's great from a plausible deniability perspective. But it also has some trade-offs in terms of how much data has to be retained. So yeah, trade-offs. But if your safety is on the line, I'd obviously make that trade-off.
So your book is Crypto for Conservatives. Can you make the conservative case? I know you're not one of those people that says 100% into crypto, all your money should be here, right? You are a much more conservative investor than that. But can you kind of talk about how you think about portfolio balance and currencies and what you're investing in, where you're putting your money?
Yeah, so I think the short version for me, I guess, is that I think there is a lot of money to be made speculating in crypto. That the last decade has kind of made that obvious. There is upside, and I want to capture some of that upside, but I want to do it in a way that's fairly calculated and try to be as low risk as I can by just having a good grasp on what it is I'm buying exactly when I buy a particular crypto token. So it's the same way that, well, I'll put it another way. The reason I decided to write a book about it was that I read a couple of books that were really helpful. I read Why Gold, Why Now by E.B. Tucker that was all about gold investing. And like, it's even a pitch. It's a pitch for a particular stock that he's on the board of the company and wants to sell you. And I knew that going in, but I wanted to hear his pitch. And it was a really interesting book. It sort of helped you understand the royalty and streaming model for gold mining. And I read Benjamin Graham's The Intelligent Investor that was all about how to intelligently pick stocks.
Sure.
And there's really good advice in these things. But I don't see anything like that for the crypto market. The crypto world is basically how to read charts and spruiking someone's favorite coin. And I wanted to put something out there that was much more. I'm not going to tell you what coins to buy, but I'm going to say here are the issues that you want to consider when you're deciding whether or not to have a coin in your portfolio. You want to think about, what are the political risks internal to the project and external from the government. You want to think about what is the issuance policy really like? What's the rate at which new coins are created? Who do they go to? Who gets the new coins? All those kind of things.
I mean, that's an interesting question of the initial coin distributions, because it's the same thing with kind of how the Federal Reserve works in here in the US, where the people that get the coins or that get the dollars first are, the big banks and those rather unsavory institutions. And then eventually it gets inflated away as it trickles down through the economy, to use a silly term. But so, yeah, I guess it's always a risk, is whenever there's something new, how much of an insider's game is it in some of these new crypto markets? Like, there's so many scams out there in the crypto world.
There absolutely are.
A lot of them have fallen apart, but there's some that still, there's still new cryptos coming out today. Like, it's a weird market. So I guess, what are those criteria? You talked about governance earlier, right? Make sure there's a fixed amount of this, right? There's rules to the game that everyone can understand. What are some other things you look for?
So, I mean, one would be, we talked about the privacy issue. I'd want to know what's the privacy technology like on this particular coin. I would want to know internal political risks are a thing that I think a lot of people maybe don't consider going in. So what is the governance structure of the crypto token itself like? So I think people would like to think that crypto is very unpolitical, and it's sadly just not true. There are decisions to be made in how the software that runs the network will be developed, and decisions can only be made by humans.
Right.
This is Austrian 101, right? This is human action. And that's no less true of Bitcoin than anything else. There are vested interests that would like Bitcoin to develop in one way and not another. So just to flesh out what I mean, there's a broad spectrum, I think. From on the one end, there's something like Firo, formerly called Zcoin, that has a corporation that oversees the development, and the corporation actually gets a cut of all the newly mined coins. So they obviously have a lot of control over the development, and they have a lot of vested interest. And the development is it's going to be done in a way that benefits that corporation. It's just how it's structured. Everyone knows that going in. If you're comfortable with that structure, that's fine, but that's what you're signing up for. The far other end, where it's a lot more chaotic, but also a lot more decentralized, is something like Bitcoin Cash, where there are at least 6 different implementations of the node software running in production today. I don't know of any other crypto that has that. So even mainline BTC Bitcoin has really only one. It's Bitcoin Core, that basically everyone runs, as far as I can tell. Where Bitcoin Cash has all these different implementations written in different programming languages, and they all interact together. So if the team behind one tries to do something untoward, they're easily cut out. They're easily replaced by these other sort of competing implementations. Like I said, that there's a lot of duplicated effort there. That's a drawback. But on the other hand, it's very robust. So different people have tried to fork Bitcoin Cash or steer the project in ways that were to benefit themselves. So noticeably, Craig Wright, who tried to take it away and ended up having to make his own coin, BSV, because he couldn't steer the community away. And Amaury Sachet tried to change what was going on in Bitcoin Cash to give himself and some privileged developers a cut of the coins from all the mining. He just got cut out of the ecosystem. And that can be done because there's this super decentralized, chaotic, anarchistic kind of governance.
Sounds like my kind of place.
Yeah, it's kind of not everyone's cup of tea for obvious reasons. Another example would be Dash, where there's this whole kind of staking system built around voting for what should happen next in development. People who are very, let's be honest, normal people are pretty comfortable with the idea of democracy, and voting on what we should do next is very natural and normal to them. And that's very, like, I'm not that person. I don't have a lot of faith in democracy. I prefer the chaotic anarchy. But it's worth understanding who's in charge, who's making decisions, how are they made, and who's going to be benefiting before you put a significant amount of money into a project.
Yeah. It's speaking of democracy, your prison colony over there. So you're both liberty oriented, you're a Christian, and you live in Australia. That seems to be I don't know if there's a government in the world that hates you more than your own.
Yeah, I mean, I was born here, so it's not like I was born in the US and thought, you know what, I want more liberty, I'm going to move to Australia.
I get it, but I guess how is it? What's daily life like? Like how free do you feel? How oppressed do you feel? Like, is it as overwhelming as
honestly? It's not nearly as bad as some of my American friends think it is. I think in the height of pandemic lockdown, it was that bad. It absolutely was that bad in Sydney and Melbourne, which are kind of our two biggest cities. It's kind of like, what was COVID like in New York and LA? That's not necessarily an accurate reflection of what it was like in some small town in Idaho.
Right.
Australia is like that. There's a lot of country towns. I remember, at least a year in, if not more, into the whole COVID fiasco, I had friends living in a smaller town in rural Queensland who said they had never seen a single person wear a mask anywhere. Then they go to town, no one's wearing one. It blew over their town. People just completely ignored it. So it just depends where you go. It's a very Harry Brown kind of way to live. Just don't worry too much about what's happening in Canberra with politics. Just go where you're treated best. And there's plenty of places in Australia where you could live surprisingly free and barely feel it. It just depends how far out in the boonies you're willing to be.
Yeah, it was like that. It sounds, other than the actual camps that they set up in Australia, it sounds pretty much the same experience. Although you had more people, it seems like, that were on board with the regime of shutting everything down. Then there seemed to be more resistance. You have more of a, I don't know, are people more in alignment with each other? Like, do you feel more like a single nation, where over here we feel like, some people feel like it's one nation, most people feel like it's 50 states?
Yeah. I mean, I think we definitely feel more like a single nation than we do like, whatever is 7 states. There's not that much difference between the states here. There's subtle differences, but they are very subtle. So it's not like, there's people in Texas that would happily see Texas be its own country, and there's no separatist impulse here, that, as far as I can tell.
So secession's not taking off in Australia anytime soon.
No, to my sadness. The state I live in is Queensland. I think it was the one that probably was the best to be in by a significant margin during COVID. And I would love to see Queensland secede. But ironically, it's currently under a Labor state government, which is like kind of our Democrats. And despite that, it was the best state to be in during COVID. Why? Don't know. How did that work? Couldn't tell you. It just was. It was the one that stayed the least locked down, where the most, I think, people on the ground just ignored so many of the things that they tried to do.
I mean, that does seem to be the answer, is the more people that just ignore the rules, like the more people that kind of go their own way, whether it's buying, privacy cryptos or, getting out of the dollar or just ignoring the authorities, it works surprisingly well. No matter where you are in the world, the governments only have the power that you let them have, which is, sad then that so many people let them have it. So many people seem to like being told what to do.
Yeah. I think, do you like Rick and Morty?
I've never seen it.
It's a great sci-fi TV show, but there's this line, it's a great one-liner from Rick. I think he says in a very recent episode something about people are going to vote, and he says, "Oh yeah, that's that thing people do when they like being told what to do, but they don't like admitting it."
Yeah,
so that rings true.
All right, we're coming up on an hour here, Nick. This has been a very interesting, and there was some technical parts we got a little lost in the weeds on, but I think it was pretty fascinating to me. So I think the listeners will enjoy it. Where can people find out more about you, find your books?
Sure. You can follow me on Twitter. I'm at Crypto Deepthink. It's a weird Twitter handle, but it seemed to work I'm just trying to raise the level of discourse on crypto discussion. So at Crypto Deepthink on Twitter. You can find the crypto book at cryptoforconservatives.com. You can find the tax book at beingbiblical.com if you really want to get into the weeds on biblical ethics and taxation.
So I hadn't realized that you wrote that book. I was looking through the crypto book, and then I kind of listened in. You did a podcast with Bob Murphy, who's a guy I look up to. And then I heard about that book through there. So it's on my reading list next. So I'm going to get into the taxation is slavery, and maybe I'll have it back on to talk about that one, because that's a topic that's interesting to me.
Be my pleasure.
I really appreciate you coming on, man. Thanks.
No worries. I'll ask you one thing. If you do look at the website for either of those things, don't judge my advertising copy too harshly. I've been following you, trying to learn how to write better copy.
Oh, no worries. I wouldn't judge it. I would just fix it for you.
No worries. Thanks very much. Really enjoying the Practical Liberty content. Keep it up.
All right, that's the episode for this week. And remember, go grab my Levels of Liberty tactical checklist. Again, I put this together as a simple guide to help you kind of assess how free you are in your own life, and then how to climb up the different levels of liberty. So you can grab that at henrybing.co/liberty. That's henrybing.co/liberty. All right, see you back here next week.